I'll continue the rant. Yeah. You know, anybody that wants to learn this stuff, that wants to take this serious, I've mentioned before and I'll mention again, there's going to be a certain onset of individuals that last and a certain onset of individuals that don't. This market's not for everybody. It takes a serious investor. It takes a open-minded individual. And you can see that growth in the CyPRX community. There's people that have come in the DeFi space. They're dominating. They're making, $100, $200, $300 a day. That's awesome. That's outstanding. And we also have individuals in the chat that are now managing multi-million dollar funded accounts. So it doesn't really matter which way you approach it. If you approach it with a serious fashion and you take it serious and um, you're determined, you set goals and you review some of the things that I'm trying to teach you guys, it's very possible no matter what direction you take. Um, what I'm about to show you, again, to the general public, this is the boring stuff that 99% of manual retail investors right now in crypto are not paying attention to it because they think you need to be a trader to understand this stuff. This is extremely important information that, again, if you went up to your every average day crypto enthusiast and you asked them to pull the information up that I'm going to share with you in today's video breakdown, which is simplistic information that everybody has access to, they would look at you like you're deranged. They would look at you like you have something on your face. Okay. Um, Before we even get into the fundamental breakdown real fast, those you all listening in from the outside on YouTube, do me a favor, smash that thumbs up button and subscribe. It does help the platform grow and it does boost the algorithm. So I do appreciate the love and the support. I want to, for those of you all listening, to encourage you guys to just go back, even if you've read these PDFs in the Discord in the educational section. Four that I recommend, you reiterate these and recycle these throughout your trading career. They're very good, healthy reminders. It's the Unrealistic Trading Expectations PDF that I typed out for you all. Go back and read that one in your free time. The Heartbeat of Trading, go back and read that one. A Journey of Self-Mastery, go back and read that one. And Redefining Your Approach to Trading. I hand wrote all of the PDFs in this Discord. Whether or not I used artificial intelligence to help me out with the more advanced in-depth PDFs with the fundamental breakdown, sure, but these ones in particular were handwritten and translated from my personal journals over to you guys. So utilize them, and people that live by them and that infuse this information in your life, I promise you, to some degree, no matter what degree that may be, for you personally, it will benefit you, right? Whether you just take a paragraph out of it and you implement that on a day-to-day basis, whether or not something over here in this PDF that you might be doing wrong in your training that you can relate to, you can then tweak by relating to me, experiencing that and channeling that energy and that information to you. So I just encourage you guys to go back. Always don't ever be done learning. Don't ever think you know it all. Don't ever be stagnant. Even to this day, I'll open up books that I've read 4 or 5 times and I'll just read them again and I'll always pick something up new. So I just encourage you guys to always progress yourself with your education. All right, so moving on. Now, one of the main reasons I wanted to pick up where we left off is just to show you guys that this is all possible, right? We said over a month ago, you guys can see the video. This video is not public. This is only for you all, actually, in the private community. Now, on the recording of this particular video, there was like 33 participants. So that's why this one has a lower view count. This one has 8 views after the recording was uploaded. So a lot of you guys saw this, and we had predicted a pre-planned analysis that if we saw stronger upbeat fundamentals, creating strength for the United States dollar because of the resilient US economy, we saw higher inflation readings, which we didn't really see in the month of June, but still holding that market sentiment that the Fed is going to push rate cuts back because of the stronger economic resiliency in the US. And we also had the upbeat labor market figures with the strong NFP. And we called all of that out before the fundamentals actually came out. We did our pre-planned analysis where we said, hey, look, it's the end of the month of May. What should we be paying attention to in June? What things could cause a risk off market mood? And we broke this down piece by piece, and you can see that video. If you go back to this at 12 minutes and 30 seconds, you can go back and you can watch that in real time when we talked through this. And so now looking at the market where we are at, and the reason why I show this, it's not to toot our own horns here at CYPRX, ladies and gentlemen, it's to really show you all that Not necessarily predicting the market because that's not what we're doing, but correctly analyzing the market is possible. Do not let anybody on this earth tell you that it is not possible. It is 110% possible. There have been millionaires and billionaires from these markets doing the same exact thing that I'm trying and attempting to teach you guys right now, fundamental analysis, and implementing it properly and siphoning money from these markets. It's possible. But the average individual, like I mentioned at the beginning of this breakdown, will not go through this educational process. They won't work on themselves and read these PDFs. They won't master handling $2.5 million in funding capital like one of our CYPRX traders did today, because they won't take the time, right, to understand this stuff. And so, again, just giving you guys a live example that over a month ago we talked about this. And so now we are here. And we have a very interesting set of key economic data that's set to come out this week that we need to see unfold in a certain direction, in a certain manner, to see different price action fluctuations, whether the market breaks lower at $2.1 trillion and heads lower down to 2 trillion or maybe even 1.8, or do we bounce and start to correct from here and trail back to the upside? The market's going to make a decision this week. We have key economic data. I typed that fundamental piece out for you guys, right? So we're just going to kind of focus on the broader spectrum of data, not really individual days, just looking at the market data as a whole using these cheat sheets. And we're just going to do a little price projection as to what could potentially unfold, just like we did a month ago. So that way we know this week, if we see a further depreciation in the total cryptocurrency market cap, we know why. We're not lost in the sauce like these other mainstream XRP enthusiasts or any other crypto enthusiasts on the internet that are always tweeting out, what the heck's going on with crypto? We already know. We know what's going to create an inflow of capital into dollars and an outflow of risk assets, or vice versa. Okay. So what got us up to this point? Let's just do a quick recap. Okay. The top of this most recent market pump that took place in May topped out predominantly roughly around the second to last week of May. We can see one of the first healthy economic reports where the U.S. output grew at its fastest rate for over 2 years in May. This came out on May 23rd, 2024, during the New York session. U.S. business activity growth accelerated sharply to its fastest for just over 2 years in May, according to a provisional PMI survey, data from the S&P Global signaling an improved economic performance midway through the second quarter. At the same time, we started to see economic activity dwindle in the UK and China, and in the UK, and in the Eurozone. We started to see economic strength and resiliency maintained in the US. What did that do? If you go look at GBP USD, if you go look at Euro USD, those markets bottomed out, right? Or topped out and started depreciating in value, just like these risk assets did, right? I can show you. Let's go take a look at the same exact date, Monday, May 20th, right? If you go look at GBP USD, again, a risk asset up against a safe haven asset, go look at the date. Here's the end of May. Risk assets topped out. Predominantly, the month of June has been a pullback in risk assets. Great British Pound is a risk asset up against the United States dollar. You can go see the same exact pattern, relatively speaking, on Euro USD. Okay. And so with that being said, understanding that shift in market sentiment and that shift in order flow, let's go back to the total cryptocurrency market cap. We started to see an inflow of dollars. We started to see risk sentiment dampen, and we started to see more demand for the dollar. That demand continued at the beginning of June when we saw stronger labor market figures, right? So we saw the US dollar jump after strong US jobs reports, where the surge in non-farm payrolls triggered a dollar jump across the board, while risk appetite, it says it right here, risk appetite started to deteriorate, right? Why, when there's healthier labor market data, do investors tend to flock to dollars? If the US economy is doing strong, is healthy, it's strong, it's resilient, and other economies such as the Eurozone or the UK are not doing as good, investors are going to want to hold their capital in the economy, the domestic currency that's doing better. I drew this out for you guys the other day, right? And a breakdown piece by piece. So this was now the second major fundamental report as we headed into May that weighed on risk sentiment. We saw strong inflow into dollar. This at the same time, I showed you guys proof, was the same exact time that everybody was saying de-dollarization. Oh, the petrodollar agreement ceases to exist now, so the dollar is going to fall off the face of the earth. No. Rolling into the second week of June, we had a more hawkish toned FOMC, where despite disinflation still taking place, where the CPI and PPI reading did come out lower than previous readings, showing signs of continued disinflation, the US economy still remains strong and resilient. And they noted that in their FOMC statement. And it says right here, one softer than expected monthly inflation reading did not stop Federal Reserve officials from delaying the expected start of interest rate cuts. This dampens risk sentiment. This pushes rate cut hopes back further, which we know has been one of the key metrics driving demand for risk assets. You can see right here, their tone implied only one 25 basis point rate cut in 2024 instead of 3 25 basis point rate cuts estimated in the previous projections back in March. Right? So this diminished the rate cut narrative, which weighs on risk sentiment and drives more of a demand for the US dollar as market algorithms start to price in higher interest rates for longer. Right? Very simplistic. And the downtrend continued. Look at this. This was week 2 in June. So we had a May turnaround with the upbeat US dollar or the US economic figures. Then we had stronger labor market data. And then we had a hawkish toned FOMC meeting pushing back rate cut hopes. All things weighing on risk assets, further outflow. Now that leads us up to this last week. Last Friday, what did we see? US output growth hits 26-month high in June. Prices pressures cool. US business activity growth accelerates to its fastest for 26 months in June, according to the provisional PMI survey data from the S&P Global, signaling a strong end to the second quarter. So we're still seeing strong economic data on the US front that's creating more of a demand for the US dollar right now and less of a demand for crypto, i.e. the riskiest asset class right now that anybody can trade, right? So that's why we see these massive price fluctuations. And this week, we have a slew of economic data on the forefront to be paying attention to. Do we see this week scenario number 1, scenario number 2? Scenario number 1 is the less favorable environment that we're all most likely not necessarily fearing, but it's going to shake a lot of people out. This is the scenario where we see more sell pressure in risk assets, continued strength in the dollar, and a further dampening of risk sentiment, possibly an even further decline in the total cryptocurrency market cap. So yeah, I'd say people need to be paying attention to what the heck I'm talking about. You know what I'm saying? But again, I've probably bored 99% of people that are going to rewatch this video to death. They've probably already clicked off of it because they're just not, again, these are the things that financial experts of the world are focusing and paying attention to, that hedge funds and asset managers are paying attention to these types of fundamentals. If you think they're not, again, just do research. There's obviously, of course, a whole multitude of other things that they're focused on, but these fundamentals are 110% some of the factors playing a role on what is moving this market sentiment. Okay. So scenario number 1, the scenario that, again, is less favorable, the one that I hope does not happen, but wouldn't be surprised if it did. This would be a strong dollar scenario, risk off market mood continuation. This would be led by strong US fundamentals, indicators showing continued strength and resiliency in the US economy, things like a healthy labor market. High core PCE index readings this week, both month over month and year over year. If the core PCE comes out higher than previous readings or market forecasts, that's going to dampen risk sentiment. Because again, what is it going to do? It's going to push back the previous sentiment from the FOMC. Again, rate cut bets. It's going to push back rate cut bets because the Fed's going to need to do what? Higher inflation readings. They're going to need to keep interest rates higher for longer to tame that inflation or possibly even consider hiking rates, right? I don't think that that's on the table, but still, it's something that if a higher inflation reading drops, they're going to have to consider. The Fed has said that they're being data dependent, right? So these scenarios, stronger US fundamentals, higher inflation readings, would most likely, it's not guaranteed, but it would most likely result in a stronger dollar scenario and risk asset bear continuation moves. Okay. So with that being said, we now know ahead of the curve based off of fundamental data, what the most likely scenario would be if we saw these one-sided data reports. For crypto, via technical analysis wise, if all of these fundamentals come into play, where we see stronger and resilient US economic data, higher inflation, and a stronger dollar, and at the same time, technical analysis is telling us we are not seeing any type of bullish recovery. That means a bullish break above previous bearish market structure, higher highs and higher lows coming into fruition. If we do not see that, we see all of these bearish fundamentals and we fail to break above these previous areas of interest where key economic data came out, we are most likely going to head to the downside. Whether we create a tiny fractal liquidity grab above these intraday highs to then turn around, or we continue lower from where we currently sit, continuing this overall market downtrend that started at the beginning of June as we ended May. And we're most likely going to see, zooming out, a total cryptocurrency market cap below possibly $2 trillion, maybe even just scratching the surface of 1.9. Now, I don't think it's going to happen in 1 or 2 sessions, but this week is definitely going to be a very important week where if we do see a continued risk-off market sentiment, we could start to see the market roll over to come and attack these previous higher lows. So again, we are at a very key turning point. Now, the scenario that we would all most likely like to see would be scenario number 2. And that would be a scenario where risk assets flourish in an environment that's most likely created by weaker US economic data, lower inflation readings, showing signs of continued disinflation, leading to US dollar weakness or a cooling of the recent US dollar strength, and a possible bottoming out from where we currently sit in crypto. So that scenario number 2 looks like this: dollar bears, risk asset bulls. Weaker US fundamentals, indicators showing signs of cooling in the US economy, weaker labor market data, declines in core PCE, both month over month and year over year. That would most likely lead to weakness or cooling of the dollar. Reduced demand for the dollar as economic indicators weaken and inflation cools, right? So with that being said, in a scenario like that unfolds this week, and we flip bullish in risk assets, bottoming out from where we previously bottomed out, interestingly enough, at the exact bottom of this price action. Tell me I'm not crazy. This is just a full circle to show you guys that these things move off of fundamentals. Well, would you look at that? What came out on the same day? Federal Reserve Chair Jerome Powell's comments after 2 days of policy meetings were not as hawkish as many had feared. So let me just zoom out for a second and show you what I'm trying to show you. Dovish commentary down here at the bottom. We know dovish comments. I've taught you guys, go look at the PDF in the Discord and go watch some of the previous video breakdowns, usually tend to end in what? Risk asset bulls. Why? Because this boosts and props up the rate cut narrative, i.e., market algorithms pricing into the markets a low interest rate environment possibility. They buy risk assets in an environment like that. And so you saw when Jerome Powell made those dovish comments and markets got hopeful that rate cuts were going to happen, they started buying risk assets. Inversely, what created sell pressure on the market? When that fundamental aspect was taken out of the market by what? By higher and upbeat US economic data, jobs reports, healthy figures in the US economic front, hawkish comments from Fed speakers, all the things, again, that weigh on risk assets happened in June so far. In May, it was the opposite. So now we are at a key turning point where if we do see lower inflation readings and we see downbeat US economic data and we see a cooling in the strength of the dollar, we could bottom out here like we did in May and start to chug away back towards the upside, correcting this most recent downtrend that we have experienced. So we are at a very interesting turning point. Do we create a demand here, a turning point in the total cryptocurrency market cap, or do we see a continued risk off market mood and see a further downturn, right? This week, we will know once the data comes out, what direction we are headed, how we need to react, right? I've told you guys previous When the market was pumping last month, we were not buying. We were waiting for our DCA positions to come into fruition. And you guys saw in the chat what has happened over the past 2 weeks. Ding, 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 ding. Alarms and alerts have been going off left and right. Discounts, discounts, discounts. Because now the market is discounted from where it was back in May. Notice though how everybody's fearful. Investors are seeing that as opportunity, right? And so hopefully this perspective paints a visual for you all on where we're currently at, what we would need to see in order to see the market flip back bullish. Now, obviously, of course, these aren't the only contributing factors. I want to just clarify that. But again, in the chat, you guys will know what some of those other contributing factors are. I just didn't want to waste time, like geopolitical tensions and escalations that took place in the Middle East that also weighed on the strength of risk assets and so on and so forth, all of those things, right? That I'm not even going to cover in this video because it would just be too long. We now know, generally speaking, what type of environments would need to be created in order for us to see a bullish recovery in risk assets. And if not, and we see a continued bearish move in risk assets, we know most likely what's taking place. And we're not confused and lost into the sauce as to why our risk assets that we hold long term are declining in value, right? This gives you a well-rounded educational approach and allows you to literally survive these market swings because you know why they're happening, right? So keep all these things in mind moving forward. I thought that I'd break down, the overall total cryptocurrency market cap, where we're at, what we need to see. Hopefully we see scenario number 2, which would be a bottoming out of this most recent downturn that we've seen, lower inflation, downbeat economic data, cooling of the dollar, and a move back to, roughly around 2.3 to 2.4 trillion dollars, at least seeing a recovery from these previous market downturns. If not, then buckle up your seatbelts, because if we get the opposite scenario, we are most likely going lower to some degree. So I hope everybody's prepared for that mentally, play the sides of the market properly, and I hope that you guys all come out on top. Outside of that, blessings to you guys, and I'll see you all in the next video breakdown. Alrighty. Anybody on here have any questions before we hop off?